Today, we're looking ahead into the investment landscape for 2025. Let's first look at some market indicators. There's an interesting metric called the Potential Growth Indicator, or PGI. It compares the ratio of cash in taxable money market accounts to the total value of US stocks. As of now, it's sitting at about 10.9%. So what does that tell us? Well, it suggests that there's a decent amount of cash on the sidelines, but it's not at extreme levels. For context, during the 2020 pandemic sell-off, this number spiked to 19 to 20%, indicating a prime time to invest. During the 2008 financial crisis, it hit an eye-watering 50%. So, our current level is within a normal range. But it's worth noting that there's a lot of international cash flowing into US markets. This could potentially make the market more overvalued than the PGI suggests. Let's shift gears and talk about a hot topic: Bitcoin. Disclaimer: the following content is for informational purposes only and should not be considered financial advice. Bitcoin recently surged past $100,000, giving it a market cap of about $2 trillion. Now, opinions on Bitcoin are polarizing, to say the least. The skeptics argue that it's essentially empty nothingness, now valued at $2 trillion, drawing parallels to historical financial bubbles. On the flip side, Bitcoin enthusiasts question the intrinsic value of gold compared to Bitcoin. They argue that younger generations may prefer digital assets over traditional stores of value. Plus, we're seeing increasing institutional adoption of Bitcoin. Here's my take: Bitcoin could potentially surpass gold's market value in the future. But remember, it's incredibly volatile. We've seen 70% drops multiple times. So if you're considering Bitcoin, make sure it aligns with your risk tolerance and investment horizon. Now, let's talk about AI and technology trends. There are massive opportunities in AI across various industries, particularly in medicine and health diagnostics. But here's a word of caution: don't focus solely on companies building AI infrastructure. The real value will likely come from how AI is applied across different sectors. Think back to the internet boom. The most successful companies weren't necessarily those building internet infrastructure, but those that found innovative ways to use the technology. History often rhymes, if not repeats. Let's look at a few specific stocks that are on my radar. But before we do that, don't forget to hit that like button and subscribe for more market insights. First up is TJX Companies. This is a more cautious pick, but I believe it could deliver 12 to 15% annual returns. They've built an impressive system for buying and distributing unsold inventory at scale. Next, let's talk about PayPal. This is a moderate pick that's highly rated in many ranking systems. They've got a strong brand, impressive cash flow, and a solid balance sheet. However, they are facing some market share challenges, so keep an eye on how their new leadership navigates these hurdles. For those with a higher risk tolerance, consider DoorDash. They're leading in food delivery and have potential for expansion. Their financials look promising, and they've got a strong leadership team. Now, I can't wrap up without mentioning Tesla. It's been a wild ride for Tesla investors, with the stock up 15 times in just 5 years. The company has a balance sheet that's arguably stronger than the entire global auto industry combined. They're attracting top technical talent and are at the forefront of AI in the automotive sector. However, Tesla's not without risks. The stock is highly volatile, and its valuation can be concerning. If a 38% decline in Tesla stock would shake your resolve, you might want to reconsider your position size. As we look ahead to 2025, I expect we might see slightly below average returns in the broader market. We'll likely continue to see volatility in high-growth stocks. If you have a shorter time horizon or lower risk tolerance, it might be wise to tilt towards more cautious investments. Remember, the key to successful investing is understanding your personal situation, risk tolerance, and investment goals. Don't blindly follow anyone's advice, including mine. Do your own research, stay informed, and make decisions that align with your financial objectives. And drop a comment below with your thoughts on the 2025 investment landscape.